Hi students, in this video I am solving ninth problem. So the ninth problem is Kranti and Sumangala are partner sharing profits and losses in their capital ratio from the trial balance given below and adjustments. You are required to prepare trading and profit and loss account for the year ended 31st March 2019 and balance sheet as on that date 2019. So in a debit balance stock we have this is the opening stock and purchases and debtors, bills receivable, wages, investment, postage and insurance. Next is plant and machinery, salaries, prepaid rent, bad debts, furniture, cash in hand and sales return. So these are debit balance and the credit balance side is a Kranti and Sumangala both are partners. Sales, sundry creditors, bills payable, commission and purchase returns. So this is a trial balance is given in the ninth problem and we'll see the adjustments. The first one is opening stock is given here. So it is a 1st April 2018 is a opening stock and closing stock value cost price rupees 28,000 and market price is 32,000 rupees. So in this if suppose the cost price is there 28,000 and market price is 32,000 we need to take a so which is the less amount that amount we are taking as a closing stock means in this we are taking 28,000 as a closing stock amount. Next adjustment is this is the one first adjustment and second adjustment insurance is paid after 30th June 2019. So we have a hidden adjustment here in the insurance. So insurance amount is 7,500 rupees and in that we are calculating for the 30th June 2019. So and we need to calculate for the 31st March 2019. So then we need to into 6 divided by 12 we need to make the calculation for this insurance adjustment. And next is outstanding expenses wages 800 rupees and salaries 700 rupees. So with wages and salaries we are adding these amounts whenever the outstanding expenses is given, so that amount will add with the wages or the whether it is the salaries it will include in the salaries and this will include with wages outstanding expenses. This is one third adjustment and fourth adjustment is book value of plant and machinery is reduced to 13,000. So before we used to calculated depreciation as some percent amount on plant and machinery or motor vehicle or furniture. But in this we are going to reduce the amount of rupees 13,000 rupees. So next is depreciation. Next fifth adjustment is depreciation furniture by 5% per annum. So on the furniture 12,500 rupees into 5 divided by 100 will get the depreciation amount. So that amount will deduct with the furniture. Then next is sixth adjustment is provident fund. Provident provide further bad debts 800 rupees. This we will add with the bad debts. Bad debts with old bad debts we are adding new bad debts. Next is goods worth rupees 3,000 distributed as a pre-sample. So this 3,000 is given as for the pre-samples distributed goods distributed for a pre-samples. So that is 3,000 rupees. So these are the 7 adjustments as given. So we need to calculate with the P&L account, trading account and balance sheet. So opening stock is first we are calculating a trading account, trading and profit and loss account in this tool. So that is first one is the opening stock. Opening stock is how much? 32,500 rupees. Opening stock it is 32,500 rupees. So mentioned it here. Two purchases. Purchases amount is 40,000 rupees. Purchases amount is 40,000 rupees and we need to deduct with Purchase returns amount is 1000 rupees. Purchase return. So after deducting 40,000 minus 1000 rupees, so it is a net purchase of 39,000 rupees. Next is wages. Wages we have a adjustment. So first it is wages is given in the tool, it is 3000 rupees, and outstanding wages it is 800 rupees. So 3000 plus 800 rupees is a 3800 rupees, it becomes wages. So next is sales. By sales, sales amount is 60,000 rupees, 60,000, and need to deduct with the sales return. Sales return amount is 1500 rupees. So after deducting in a sales return, so it is a 1500 rupees, it becomes a 58,500 rupees. Next is by closing stock. By closing stock, we are taking whichever the value is small. If it is given a cost price as a market price, so we need to take a smallest amount. So in this, it is a 28,000 is a small amount. So that had to consider as a 28,000 as a closing stock. Next, buy goods distributed as pre-sample. So this is a goods of rupees 3000 distributed as a pre-sample. So that is coming trading account credit side. So after adding these amounts, 58,500 rupees plus 28,000 plus 3,000 becomes 89,500 rupees. And 32,500 rupees, 39,500 and 32,000, 3,800 rupees. So in these amounts we are deducting with the 89,500 rupees. So we'll get a balance is left with 14,200 rupees. This is a gross profit. This gross profit carried on will this is a gross profit will come in a P&L account credit side. That is 14,800 200 rupees we are taking in a P&L account as a gross profit. Next is postage. Postage amount is 2,700 rupees, and we don't have any adjustment for the postage. So just to enter the pass the entry in the P&L account. Next is insurance. Insurance amount is 7,500 rupees, and less prepaid insurance. We have adjustment for the prepaid insurance up to 30th June 2019. So from March to June we need to calculate, means April, May, June. 3 months we need to calculate. So we got amount as 1,875 rupees. So prepaid insurance it's so 7,500 minus 1,875, so it is a 5,625 rupees as a insurance. Next is the salaries. Salaries amount we have adjustment with the salaries. Salaries amount is to 4,850, and outstanding expenses of salaries is 700 rupees, that we are adding. Outstanding expenses we are always adding with the this trial balance entries. So it becomes a 5,550 rupees. Next is depreciation on plant and machinery. Plant and machinery amount is 15,000 rupees. So in that we are deducting amount of that how much it is reducing amount 13,000 rupees. So it becomes after deducting it is a 2,000 is left over. And furniture amount so furniture amount is 12,500 rupees into 5 divided by 100. So depreciation amount we are taking in a 625 rupees is a depreciation, but in a balance sheet we are deducting a furniture amount. In furniture amount we'll deduct a depreciation amount. So leftover amount will take in a balance sheet, but in a P&L account we are taking a depreciation amount directly. So how much it was, 5% per annum, so that amount we are taken it here in the P&L account, that is 625 rupees as a furniture depreciation. So after adding these amounts, 2625 is the total amount. Next is bad debts. Bad debts old. So that is bad debts old is 500 rupees, and add bad debts new. So there is adjustment for the bad debts, that is provide for the bad debts of rupees 800 rupees that we are adding with the old bad debts. So 500 rupees plus 800 is it's a 1300 rupees. Next is to advertisement. So advertisement amount is, so goods of rupees 3000 distributed as a pre-sample. So that we are taken the advertisement. For the advertisement it has taken 3000 rupees. Goods distributed for the sample it is 3000 rupees. And need to, we'll see the credit side entries. What are the entries are coming in a credit side entry? Credit side. Mm, Next one is commission. Commission is 15,000. 50,000. So commission amount is, it is 325 rupees. It is 325 rupees. So debit side after so these are the entries are coming in a P&L account and a trading account. So after calculate, after passing the entries in a P&L account, so need to calculate whole amounts of 2700 rupees and 506.25 and 550 5550 rupees and 2625 plus the 1300 plus 3000, so its total amount is 20,800 rupees. So debit side entry is more than credit side entry, so that becomes a net loss, loss for the business. So this loss in a 20,800 rupees we are deducting these amounts of gross profit amount and a commission amount, that is 14,000 14,525 rupees we are deducting with 20,800 rupees. So we got a leftover amount is 6,275 rupees is a loss for the company. So this 6,275 loss we are distributing to both partners. Kranti and Sumangla need to share the loss of the business. So share the losses with the both partners, like 4,706 rupees and 1,569 rupees. This amount will transfer to capital's account in a balance sheet. That net loss amount will transfer to capital account in the balance sheet liability side. Kranti's amount is 1,20,000 as a opening stock amount. This is the opening stock amounts of Kranti, 1,20,000 rupees, and net loss is 4,706 rupees, and there is no drawings for the partners, so directly their total amount is 1,15,000. So if it is a profit we are adding, this is a loss, so need to deduct in their opening account. Then it is a 1,15,294. Then Sumanglas is 40,000 rupees. So 40,000 rupees, and her net loss is a 1,000 rupees, 1,569 rupees. So for her it is a 38,431 rupees as a opening stock, opening capital account. So next is outstanding expenses of wages and salaries, it has given in the adjustment. So we have taken it directly the balance sheet. 800 rupees plus 700 rupees, it is a 1,500 rupees, and a sundry creditors amount is coming in a liability side, so that is a 30,000 rupees. Sundry creditors amount is 30,000 rupees, and bills payable is that 15,000 rupees. So I'm taking it here 15,000 rupees in a liability side. Next is Plant and machinery, it was a 15,000 rupees. So need to deduct us 2,000 rupees is it 2,000 rupees we need to deduct, so it is a 13,000 rupees. Then furniture amount is 12,500 rupees, depreciation amount is 625, at after deducting 12,500 rupees it is a 11,875 rupees. Next, sundry debtors, so sundry debtors amount is 1 lakh rupees. Sundry debtors amount is 1 lakh rupees. We are adding a less bad debts of 800 rupees. So this is a bad debts we are deducting, and there's no reserve for doubtful debt, so directly we are taking a bad debts. And next, it is after deducting it is at 99,200 rupees, and bills receivable is 8,500 rupees, and investment is it is 32,100 rupees. So there is no adjustment for the bills receivable as investment, so need to pass the entries directly in the balance sheet. Next is bills receivable. Bills receivable it is at 8,500 rupees. Next, investment done. Then cash in hand and cash in bank. Cash in hand, and next we have taken closing stock only, that is 28,000 rupees before only when we are taking trading account. Next is cash in hand prepaid insurance. It is a 1,875 rupees. We need to calculate for the 3 months. And prepaid rent. Prepaid rent is 2,000 rupees. So both side we need to calculate both side entries. So if the both side amount total amount is coming equally, so need to see the yeah, we need to add these amounts. So 1,15,294 plus 38,431 and 1,500 rupees and 30,000 and 50,000. So it is a 2,225 rupees. Both side it is coming a same amount. So we are end up with the ninth problem.